What's going on, YouTube? I'm Mike with Penner Investments, and today I'm going to talk about the trades I made around the Fed raising interest rates just last week. Be sure to hit the like button, share this video so others may learn, and subscribe to my channel so you do not miss out on future content. All right, let's dive in. Just like I've been saying, inflation has been running rampant, and the Fed raised interest rates and still had a hawkish stance to staying the path to combat inflation by continuing to raise interest rates. This causes the stock market to go down pretty quickly. The trades that I entered were purchasing some SPY puts and some SQQQ calls. As I discussed, the SQQQ is a leveraged ETF that shorts the QQQ, which means the SQQQ goes up in value when the QQQ is going down. On 10/21/22, I bought 7 SQQQ calls for $5,570, which could have bought a little cheaper if I'd waited a few days as the market rallied a little bit, but you can't always get the perfect price, right? I closed them out just before the close of the market on 11/2/22 after the Fed's speech tanked the market for a quick profit of $480. Not the big home run I was hoping for, but it was still 8.6% in 12 days. Not too bad. I'm still holding on to the SPY puts to see if the market goes down a little further as the Fed's news gets baked into the stock market. Now, I've always been a long-term trader, never really entered trades with the plan of getting out, much less getting out the same day. But I decided to try something new with trading the SQQQ and the TQQQ. As I explained in my previous video, these ETFs essentially use options to short or go long on the QQQ, which the QQQ follows the NASDAQ 100. The SQQQ returns a negative 3x of what the QQQ does, while the TQQQ returns a positive 3x of what the QQQ does. This works great for small accounts as you can get the same type of movements without having to use options or be approved for options trading. This also can be leveraged up and used for larger accounts as well. Initially, when the Fed released their statement, the news reporters started talking as if the Fed was going to have a wait and see approach as the market started to rally, which was against what I thought would happen. So I started to enter some TQQ trades as the market was no doubt heading straight up. I was entering about $25,000 on these trades to take advantage of these big moves and setting a stop loss that only risked 1% of my capital. So the most I would have lost would have been $250 while I had a whole lot of opportunity for more upside. As the market moved up, I moved my stop loss up to minimize risk. And then at 2:30 p.m., the Fed Chair, Jerome Powell, started his press conference, and the market switched directions fast as he made it very clear that inflation was still a big problem and that he has a ways to go before he's pulling back from making interest rate hikes, which negatively affects the market. As the market started coming down, my trade closed out with a $125 loss. I quickly entered into trades with the SQQQ. I bought 500 shares. I think that was around $27,000 for 500 shares. As the SQQQ moves opposite of the QQQ, the SQQQ was moving up 3x, while the QQQ was moving down and was moving down pretty quickly. As my position became more profitable, rising in value, I started moving my stop loss up and eventually had my stop loss at a point where I was guaranteed to be profitable on trade, so I could sit back and relax and not be too concerned. I kept doing this for the next 30 minutes and eventually with the zigzagging of the market, eventually came back and hit my stop loss, but I made an $820 profit, which I was pretty happy with in 30 minutes. As the SQQ started to take right back off, it kind of came back just a little bit and then took right back off again as the market was still diving. So the SQQQ was moving up 3x in value. So I bought another 500 shares and quickly put in a 1% stop loss, and probably about another half hour later, it kind of pulled back and hit my stop loss, and I had an $825 profit on this trade. This kind of made my day. I was super excited here and got a 3.28% return the first time, and then the second trade was a 3.3% return within an hour. As I said before, these are some great ETFs to use and work well for small accounts. This coming Thursday, the CPI data is going to be released again, and this process will start over again. I'm still expecting the CPI data, the Consumer Price Index, not to reflect anything positive happening with the market. I'm still estimating somewhere around 3 to 5 to 6 month range before the market starts turning around. So I'm going to keep researching ways to use technical analysis, and we'll share this information when I'm happy with this strategy, and I'm almost there. I kind of think I've got a couple of data points that I like working with. But thanks for watching, and good luck trading. And as always, if there's something you'd like to hear more about or hear me research a little more, please drop a comment in the box. Have a good day. Bye.